All right, so I'm gonna do some more always in reviewing, and since I'm gonna do it regardless of whether I make a video or not, I figured I might as well take a little more time and review it aloud. And if there's certain things you don't understand, I'm not going to go into full detail some of the stuff. I'll try to, but that would just take an incredible amount of time with my thought process. So review Al's videos if there's some confusion. I only study Al. It's the only person I pay attention to with trading. I watch plenty of other trading videos and more just entertainment. It's kind of the same. I see it as the same way as Al watches the news. It's entertainment for him. He doesn't care what people say on CNBC, but he'll listen to it just because it's entertainment. Tim Sykes. I have no idea if Tim Sykes is profitable or not. I think he is. Some of the stuff he says appears to be credible. But honestly, I have not paid enough in detail to Tim Sykes to know if he's profitable. But his videos are actually kind of funny, and therefore I'll watch them sometimes. I think he's a interesting personality, to say the least. But I only study Al. So anyways, we already reviewed this day. Channeling down, trend line break, retest. Remember, major reversals require a trend line break and a retest. And this leads us to this day, which is the 10th, I believe. So bar 1, always in short, stop above bar 1. Maybe in general 20% chance high of the day, probably a little higher, probably higher probability, maybe 30%, since it's a big bar, but near the low of the day. So sub below bar 1, stop above, follow through. Body's getting smaller, so sign we may get a pullback soon. Breaking below bottom of a trading range, so maybe a double top from here to here and measure move down. I'll draw it just in case. I don't think we'll get it, but we might. Again, a little bit of bad follow through, but it's a micro channel. First reversal up should fail. No way I'm going to buy. Low one short. It's hard to tell if bulls made money buying below. Always in bulls, they can get out above. I don't think they have to, but if you do, you need the wide stop because you may get a deep pullback and a retest. I'd probably get out of shorts above. It's a micro channel. I think we're going to close this gap. I'd take profits and look to sell again. I wouldn't buy above though. So we have a low one short, and now we have an outside up bar, but problem, it's a very tight channel. This is a lot of risk. If you think about it, I'm going to have to move the chart over, but if you think about it, if I buy above this bar, or even if I bought the close, what's my risk? Okay, 1 times the risk is all the way up here. It's not a 60% chance you're going up to here. And if my stop's here, entries here, targets here, that's not a 60% trade. Well, maybe if I double it and put my stop down here, target, maybe it's 40% chance we go up to here, and that's probably right. But if I had to guess whether or not we go up here, I think we'll test down here. So it's not a great trade, and it's bad follow through. It's a low too short, but bull bar, probably buyers below with that tail. But, who knows? Okay, 3 consecutive bear bars, probably sellers above. And you can see, arguably bulls made money. They buy here, buy lower, scalp out. It's a scalp. 3 consecutive bear bars, so may have sellers above and a second leg down. We also have an obvious gap, so I'm more concerned about the bulls, the bears possibly getting a measuring gap, at least from the high of bar 1. Probably though from the high of this bar. Okay, more consecutive bear bars. We're at the target, but still going lower. So, going below the target. So I'll use this one now. Lots of bear bars, probably sellers above. It's a very tight channel. We haven't touched the moving average. I think we're going to close the gap and touch the moving average. So I'm less interested in selling down here. But I'm not interested in buying yet because we may go a lot further. Okay, tails. I would get out at the close of this bar if I was still long. The odds favor us going above it, and I don't think we're going to go much lower. It's kind of like over here. You're just probably not going too much lower. But if you get out, you got to look to get short again. Always in traders probably get out. Do they sell again? Probably sell the third close, maybe the fourth. It's higher probability to do that. Always in, bears probably get out above this bar, but it didn't trigger, so arguably they're still short. Kind of one of the importances, by the way, of getting out above bull bars, one tick above instead of just at the close, because sometimes this happens. Best looking bear bars, you know what I'm going to say. I think it's exhaustion, and I think, we sold off sharply. I think we're going to test the high of this bar before we get a measure move down. But 50-50 chance. I think higher than 50-50 we'll get a small second leg. We also are really close to this obvious target, and the bears have done a lot of work from this high to this low to get down here, so I think we're going to get down there. I wouldn't buy above it. If I did buy, I'd use a wide stop and buy more down here, but probably not a great buy. You can see it didn't trigger. And now we have a second entry buy at the target. I think that's a reasonable buy stop below, but there's probably no rush. But again, I think always in bears definitely get out above this bar, which means aggressive always in traders will buy and probably stop below here, betting on at least a test to the moving average. You got to think, it's 10 o'clock. We haven't touched the moving average all day. We're probably going to test it. We have an exhaustion bars. We had our second leg. We're probably going to get up to here. Bad low on short, probably buyers below. Some traders selling, they'll sell here, they'll sell more higher, and really, I think more importantly, it's bulls that are buying above and scalping out. Okay, weak follow through for the bulls, but it's still 4 consecutive bull bars. When's the last time we've had 4 consecutive bull bars all day? We haven't. Okay, now we did something really important here. We tested the low close and found buyers. So bears sell the close, scaling higher, and they're so disappointed they're getting out at the measure move target, but more importantly the low close. Now I have a second entry buy. I would definitely get out of shorts above. I'd probably buy if I wasn't already long. Stop below here, maybe here. I'd probably just put it below here. It's only a few ticks lower, and we're going up. And clearly we broke above these highs. Clearly always in long. That's a lot of damage done. And I think it's consecutive sell climaxes here, here, and here, and here. So I think we're going to get 2 legs up, and we'll probably close this gap. So no reason to sell yet, but probably okay to take profits. We hadn't touched the moving average all day. Best looking bull body in this whole rally, so probably profit taking. And we're at the target. So we're probably going to go sideways for at least a few bars, and there you go. So probably buyers below, but we don't know where the buyers are going to come in. We had a lot of trading range price action over here. And these bars just aren't that impressive. So you can see what happened right there. Bulls, they bought the close, disappointed, got out at break even. Now we're starting to go sideways. Now we have a second entry short. So a few things with this. I'll go ahead and talk about this. It's going to be kind of hard to see. And I don't want to adjust the scaling, so bear with me. Hypothetically, let me delete this first to make it easier. So right here, you have traders who buy the close and they're disappointed, and what they'll do if they're really quick, and this is all hypothetical, it's the same concept I talked about in the prior video of traders buying a close, scaling in many points lower and getting out at the midpoint. It's the same thing. Some bulls, if they're really quick, will buy this close, and they'll buy the close, and then they'll buy this close, and they'll, as I said, try to get out at break even, and they'll do that. Other traders will say, darn, I wasn't able, maybe they bought the close and bought this bear close and they were going for more profit and they didn't get out, and they say, darn, I'm disappointed. Well, okay, since I was hoping we were going to break above and the buy the close bulls already got out, maybe I can get out at my midpoint. So I bought this close, I bought the close of this bear bar, my midpoint's right here. That's what I'll try and do. And look what happened. You buy that close, and arguably you get out. Now, what I think is more important is it's a high one buy. It's a high one buy, top of a trading range. It's a bad high one buy, probably sellers above. So this is why I said I would go ahead and get out over here, because you're probably going to go sideways when you make it this. Now, is it always in short? Nope. I think the odds favor a second leg up, and this will probably hold. But it's also a double top. So the bears are hoping for this and a measure move down. I don't think they'll get that. They might, but 40% chance they get it, maybe less. But I don't think they will. So probably buyers, 50% pullback, and there you go. So it looks like it'll be a pullback, and looks like we'll go higher. And, bulls certainly trying to. But what I say a few minutes ago, this is the problem with these double tops. It's a micro channel. It's a big bar, forcing traders to buy high, and it's tricky. Odds favor sideways. And the 40% chance that we get this double top measure move down, as I talked about. So best looking bear bar, but fairly tight channel. I would not be long. Too much risk of a downside breakout. Good for the bulls. The bulls prevented decent follow through. We're still holding above the lows. Okay, now we have a small inside bar. I would get out if I was a bear. Too much risk now, but double bottom measure move up. Okay, buy, but low probability. Probably better to wait for consecutive bull bars or a micro double bottom. Probably going higher, but tight channel. So now I have a low one short. Again, probably need a double bottom with these. A micro double bottom type bear channel. It's a micro channel, so probably sellers above, and you probably get a test down. And there's what I'm talking about. So we broke to a new low. It's always better when you sell off, break to a new low in reverse, because the problem with this right here is everybody's suspicious. If you think about it, one trade a lot of computers will take, and people, when you're selling off, traders buy the close of this bar, and they buy the close of this bear bar, put their stop a few ticks below, and they're risking 2 or 3 ticks to make all the way up here, and maybe a measure move up to here. And if I am buying down here, stop down here, and I'm betting on a target up here or up here, my profit is like 10, 20 times my risk. Therefore, the probability is very low. And a lot of times, this happens where it kind of confuses traders. Traders are not certain if we've adequately tested these lows, and then we start to rally. So a lot of traders bet on the failure, and then we test lower. Here, great buy. It's not a great signal bar, but it's an okay stop entry buy, 3 pushes down. More importantly, we tested this low and we fell below the low of the day. It's also bar 18. The odds favored us either falling below the low or the high of the day at some point. There's a 90% chance of that. So at that moment, 90% chance we would break below the range and find, 90% chance we were going to break below the opening range and either get the high or low of the day. In this case, we got the low of the day, most likely. Well, actually, I take that back. 90% chance we're going to break below the low or the high of the day. Obviously, the high of the day is in, most likely. So I would definitely get out of shorts. And bulls probably buy. Strong entry bar, probably going up here, probably going at least a little higher. Finally broke above the moving average, but why the tail? Always in long. Surprise bar, probably second leg up. Have her second leg up. But we had a big bull bar, bad follow through. Another bull bar, bad follow through. This may be strong enough to get 3. Another push 1, pull back 2, pull back 3. Okay to get out of shorts below. I wouldn't sell. And look what happened. It didn't trigger. So clearly going higher. Trying to form gaps. We have a subtle gap here. We have a subtle gap this high, this low, this high, this low, right here, here. Now, probably I would get out of shorts. I mean, it's just, I don't like this kind of thing. It's probably better to get out of shorts and just buy a pullback. This looks like a leg in a trading range. We're at a trading range high. We broke above a trading range high. So probably going lower. And decent entry bar for the bears. Probably okay to sell and stop up here betting on a second leg down. But, if I do anything, I guess I would sell, stop up here, but not that great. Surprise bar. So just as I said, this is surprise bar, odds favor a second leg. Bear bar, odds favor second leg down. We got second leg down. Kind of outside down bar. We broke below the bottom of this channel, closed this gap. Typically happens in a trading range. So what do I think? Bad follow through here after this. Bear bar, bad follow through. Another bear bar. What do I think is going to the next bar? Bad follow through. Typical. So we have a 2-legged pullback after 3 pushes up. 1, 2, 3. Double top. Broke above the trading range. Reasonable buy. Stop low here. I don't think we'll clearly win always in short. I think we're still always in long. Arguably the bulls broke above a major high or low. Or major lower high, so probably going a little higher. Disappointing. We retested in the close, found buyers, so not great. And there you go. I would get out of shorts. If I was long, I'd get out of shorts below that bar. It's a double top. 3 pushes up, 1, 2, 3. This could be a trend we're deciding if we're going to reverse. So bear trend sideways, are we going to get trend reversal, or are we going to get bear trend sideways, trend resumption down? And we could get trend resumption down, so I'd get out below. Big bear bar, probably surprise, small second leg down. We may end up testing these lows. One thing you have to be concerned about is bulls broke above here and immediately failed, which means we may have to test down to here. Another bear bar, so 3 consecutive bear bars, probably going at least a little lower. 4 consecutive bear bars at the low of the day, probably sellers above at least for second leg down. I think it was reasonable to buy this low, and I think it's reasonable to buy this low, so probably buyers below, and bulls will get back to here. And there you go. So we've had a new low. So we have an expanding triangle. 1, 2, 3, 1. Well, really, it's 1, 2, 3, 4, 5. But you can look at it as, it's expanding. 3 pushes. 1, 2, 3. Getting bigger. 1, 2, 3. So you have to be thinking, maybe we'll get something like that. So we had 3 pushes. 1, 2, 3. Maybe we'll get 3 pushes. 1, 2, and 3. Reasonable buy, but it's tricky. Following 4 consecutive bear bars, probably, always in traders, I'd get out. It's trading range, so when we're low, I want to buy back my shorts. So I'd get out of shorts. Aggressive bulls buy, stop below. Decent entry bar. Bull bar closing on its high, probably going to release a little higher. Close the gap. Another bull bar, but disappointing. So not great. Bear bar. Problem for, like I said, this is certainly a problem for always in swing traders. It's not that easy. If I was buying, I'd probably get out below this bar. And the reason being is tight channel. It's 1, 2, 3, 4, 5, 6 consecutive 6 bar micro channel, probably sellers above. And it's not great. So, just as over here, this, if you're buying here, it's a micro channel. You're better off just getting out below bear bar. Right here, you break even. Most swing trades break even. Here, it's a micro double bottom, second entry buy. It's also 3 pushes, so it's a reasonable buy. Big bull bar. Let me fix this, it's kind of bothering me. Rather see it like that. There we go. Well, maybe I can do something like that. I bet I could. I think I could do this. Oh, well, that's probably why. Perfect. Okay. So if I bought, I'd be quick to get out. Get out. Now, kind of a surprise bar, may get a small second leg down. Outside up bar, but, not a great bar to buy above, big risk. So we may be going lower. The bulls just are not doing enough over here. And it's a double top. In general, 50-50 chance to break below. Measure move down, trading range, breakout mode. And boom, big bear bar. So, looks like we're getting trend resumption. And that's the end of the day. Guess I can't do it like that. That'll work. Okay. Big bull bar, middle of the range, always in long, but 20% chance it's not the low of the day. Bad follow through bar. So what do traders do? I'd probably get out. I don't like, if you buy above it, it's tricky because sometimes that happens, and 20% chance it's not the low of the day, which means 80% chance it's going to fall below the low of the day, and bar one will not be the higher low of the day. So it's not a great buy. And, here's your thing. So a lot of times, big bar, deep pullback, bulls disappointed, get out of break even. So I don't know, if I'd do anything, I guess I'd buy above it, stop down here, no reason to get out. And you're probably going to get stopped out, which you did. If you were smart, if you bought here and you see, okay, no real reason for me to get out of longs, big bear bar, I'm disappointed. I got an idea. If we race back up, maybe I'll get out of break even. You did. So it's kind of why bar one's not always a great buy. It's also in the middle of the range. Here, it's trying to break below the range, and it's a bigger bar. So makes a little more sense. And you had immediate follow through. So you can think about it like this. A lot of bulls, they'll buy above, and when they see that doji, they'll say, it was buy the close. I thought, why weren't bulls willing to buy above? Well, if the bulls aren't willing to buy, that means they're not strong. Therefore, I'm buying in strength, and I need to get out. And they did. And so anyways, Probably surprise bar, but either way, no clear always in direction better to wait. Consecutive bear bars, 3 consecutive bear bars, but what will the follow through look like? I'm concerned that probably buyers below the low of bar 1, scaling and lower, so I'm not willing to say it's sell to close. And that's my concern. So like I've said many times, a lot of your smart institutional traders, or really just smart traders, if they buy above, they're not going to exit below and use the stop down here, and they'll buy more lower. So what does that mean if you're an astute trader, as Al likes to say? Well, if you're clever, you might say, okay, I'll buy above. And then you'll say, oh, disappointing. I don't like the bull bar like that. I'll just get out. And you take a small loss. And we sell off. And then you say, okay, maybe buyer's below. So it looks like we're not going to go far above, which means 80% chance we're going to fall to a new low. I'll buy a new low, and I'll buy more lower. And look what happens. So probably always in long above the close of this bar. I think we're going to get up to the high of this bar. You have buyers who will buy above, scaling lower. So if I do anything, I'd buy, stop down here. Bad follow through, but probably 50% pullback at the prior bar. Okay, that's disappointing. So the bulls just are not getting what they really need to get. And probably I'd get out. I'd just get out the close because too much risk of downside breakout. And why am I saying that? Well, a few things. When you have big risk, so you got a few things. Think about the trader's equation, risk, reward, probability. When you have when I buy bar 1, why am I buying bar 1? Well, I'm buying bar 1. I have big risk. So my hope is high probability. However, my issue is how many days is the first bar the high or low of the day? More days than, it's more likely not. Most days do not have the high or low in the first bar. Therefore, there's a higher probability we're going to fall below the low of bar 1. Which means I'm trading a lower probability trade with high risk. If it's a low probability trade with high risk, I have a bad risk reward with mediocre probability. So I buy here, stop down here. 1 times my risk is right here. 2 times my risk all the way up here. So I'm basically taking a 50-50 trade, betting we get up to here, maybe higher, okay? If I'm doing that, if I'm taking a trade that's not great, what do I need? I need quick follow through. So I need high probability. So I'm assuming the next bar is going to be a big bar. I'm assuming this will be the opposite of this. So this will be the opposite of this. It's not. That's not. That is trading range price action. Therefore, I'm going to get out. Over here, big bull bar, huge risk, terrible risk reward. Therefore, I'm assuming I want it to be high probability. And if it's not high probability, I have to get out quickly. Inside bar, so bulls weren't willing to buy above. Now we have a doji. So bulls, they bought down here and they scalped out. Maybe they bought 50%, scalped out. Therefore, I'm buying something that's not high probability with high risk. I don't need to do that. Big bear bar. Surprise bar, probably going lower, probably at least lower for a second leg down. Breakout follow through, probably always in short, probably going lower. Probably getting a measure move down based upon the targets. I would clearly be short and stop up here. Oh, bad follow through bar. Well, so maybe I'm wrong. Let's think about it for a second. So, always got to be careful. You're getting, the one thing I made the mistake in right there in talking is bulls bought, bulls buying lower. So bulls are making money with limit orders. Big bear bar, more down. Will the bulls make money with limit orders? And it looks like they're going to. I would clearly get out of shorts if I was short, and I'd probably go long above that bar stop below here. Bad follow through. Still probably going at least a little higher. That's a strong rejection of the low of the day. And we had to be thinking maybe the market was probing down to the low of the day. And I still think we may get up here. So this changes the character. Okay, dojis, but no reason to sell. Lots of tails on top, but fairly tight channel. And boom, we broke strongly above the high of the day. And we may, I'm going to delete that, probably going higher. Bad follow through. Well, so I'd get out. We may test down to here, but I'd just get out below bear bar and look to buy lower. Never triggered. Going higher. Definitely get out of shorts below. Okay, and it triggered aggressive bears. May sell. I don't think they have to. And pretty disappointing pullback, two-legged pullback. Strong enough breakout, odds favor second leg down. It's a surprise. We had the second leg down, so some bulls will buy. Tight channel, first reversal up may fail, so you don't have to buy. And that's exactly why you don't have to buy. Now we have a micro double bottom, so probably a better buy. Stop maybe below here. You can probably put the stop below, but not great. And that's why. And exactly, so why did I say you can probably put the stop below, but not great? Because small bar, so it may fall below. And 3 pushes, 1, 2, 3. Remember, 50% of the time, you get the first pullback, a new high, and then you pull back. That, I would definitely put my stop below this bar. Probably going higher, but, not so great for the bulls, is it? So, what happened here? Well, it's the same thing we've had all day. Big bar, bull bars, bad follow through. Bull bar, bulls weren't willing to buy above it, and we got a high one. Bulls bought and scalped out. Bulls not willing to buy above it, they're buying below. We have another high one. Bulls bought above it, scalped out. So whenever you see those, whenever you're unsure with the stop entry, it's probably best just to get out quickly. You'll notice what happened. Bulls buy above, deep pullbacks, disappointing, and arguably it's a second entry short. We had a low one here, low two here. So when they see that, they'll just get out of the market. Consecutive bear bars makes me think we may go lower. Maybe the open of the day, which is here. I think we will. But, we run the risk of this. So if you're selling, you got to be aware of this possibility. Nope. Okay. So I think we are going for some sort of measure move down to the open of the day. And you can see what happened. We test the open of the day, but we bounced. I still think the bulls will make money buying this low. But strong enough breakout may get a small second leg down. There's our small second leg possibly, but possibly not. Maybe this is a small second leg. We have a low two short. Low one, bulls will buy. Low two, bulls will not buy. Bears will sell. So now we have consecutive sell climaxes. Probably an okay buy, but stop down here. And look what happened. So bulls bought, but they scalped out. New low and new high. So that's why it's important to use wide stops. If you buy, put a stop down here, your risk is small. And you may get this stop down, immediately go up. So this just trapped a lot of traders. I still think we're going up to here. 40% chance. If we get a bear bar closing on its low, I'd get out because 40% chance is double top measure move down. Okay, consecutive bull bars, probably going to test. We close the gap, probably going to test here, maybe go above these highs. I'd buy. It's probably okay buy for at least a small second leg up. Okay, so that's the issue. I would get out below. There's too much, this is a possible second leg trap. We'll probably go higher, but too much risk of some sort of double top measure move down. And that's the exact reason I'd get out below. A lot of times, a general rule of thumb is when you're buying and you get a strong stop entry, and then if you're selling and you get a strong entry against you, just get out. You'll save yourself a lot of heartache in the long run. Okay, high one buy. What do bulls do? Well, I think this is strong enough for at least small second leg. I think this is stronger than that, so I'd get out. I wouldn't buy above it, and you can see not many traders did. And now we're testing below. So the question is this a double top, measure move down? Are we going to break below these lows? I don't think we will, but the bulls are just not doing enough. Okay, bad high one, bad stop entry, probably going lower. Bulls made money buying below. I think they'll make money buying below. However, that's disappointing. Late in the day too, 1 o'clock. It's going to be hard to get back up to here. More down, so we're probably going to a new low of the day. And we did. So I would definitely get out of shorts, and you can see we tested the double top. So always got to be leery of that. It's also probably a 50% pullback, maybe from here to here. But either way, big rejection of the bottom. Probably okay. I wouldn't necessarily buy. It's a micro channel. Better to wait for a stop entry. I think we're going to close the gap down to here, but probably okay to get out of longs or get out of shorts. And there you go. That's why. So probably buyers above, stop below. Going higher. You can see bulls scalping out. I think trading range. So you really could just get out right here. I don't think you're going to make much more. You'll probably save a few ticks, and you run the risk of getting trapped. So kind of like over here. It's high probability to buy, stop below, but it gets lower when you get these inside bars, especially when you get that. There you go. So that's why I said probably trading range, possible second leg down. I think we're going to fall below because that's a lot of times what happens, and we did. So Bulls bought, scalped out. We went below the low. Second entry buy. Credible buy. Stop above. If you buy, I'd get out of shorts above. I'd also get out of shorts above this bar. I would not sell again. I think we're forming a trading range. I'd buy again. Stop below here. Decent entry bar. Bad follow through. Probably strong enough for at least second leg. This is not a great second entry short or low one short. And then we went outside up, but tail couldn't close above. If we get a bear bar, I'd probably get out, and that's disappointing. I'd just hold short. I'd hold long. I wouldn't get out below. Inside bar. Well, second bear bar closing on it slow. I'd get out below this bar. Just call it a day. At least for that moment. It's a little, we have about an hour left. I didn't realize, but I'd just get out. So, lots of bear bars, but the bulls aren't doing enough. And when you start to see this 14.30, I just wouldn't trade. You know, very often Al talks about you're just not going to make a lot, and there you go. That's one. Always in on this day, gap up. If anything, I'd sell, but low probability that fits the high of the day, so I'd rather wait for a second entry or more down. Consecutive bear bars, but I still think we're not quite always in short. And there we go, bull bar, probably buy, maybe buy above, stop below, but I'm not pressed. I want to wait for the moving average. Second entry short. You can sell below, stop up there. But again, so far tight trading range. If I did sell, I'd get out above this bar. Would I buy above it? Probably not. I want to see us get to the moving average. And it looks like we're reversing every few bars. Never triggered, going lower. Finally at the moving average, but 3 consecutive bear bars. I want to see a stop entry. Not getting it, not getting it. Finally, it looks like we're getting a stop entry, but very tight channel down. Is it sell? You could probably sell here, but I didn't get to here. I would definitely get out of shorts. I would not buy. And looks like we may go a little lower, second entry short. So if I did, I'd sell below, stop up here. Falling lower, may try to get to the new low of the day. We have our second leg down. Surprise bar, probably another second leg down. I don't think this is strong enough to erase this, but we may close the gap. I wouldn't buy above it, but I'd probably get out of shorts. Never triggered, second leg down. Probably getting bad follow through after this. We had a bear breakout, bad follow through, another bear breakout, probably getting bad follow through. Decent follow through, probably going lower. Going lower, going lower, lower. Starting to channel down, but what's happening right here? Well, we're testing the low of the day, and the bulls just are not getting a stop entry buy that's that great. They hadn't had a great stop entry all day. I mean, other than this bar didn't trigger. So hypothetical bears are short, and they didn't get out above because it never triggered. Hypothetically, they don't get out above because it's a bear bar. If they did get out, they get out below here, stop up here. Bear break below the range. Consecutive sell climax is here, here, and here, and here. I'm just not willing to sell down here after this much selling. So I'd wait for a pullback, 10 bars, 2 legs. Odds favor in 10, 15 bars from now, we're going to be somewhere in here. So I don't think we're going much lower. That's exactly why I wouldn't sell. Strong rally, probably going to get to the moving average. This probably was exhaustion. Probably, we're close. We tried to break below the low of the prior day. We'll probably try again, so I wouldn't be shocked to see us pull back. So now we have a double top. Bears want to measure move down, but always in long, probably need a second leg up. But we're breaking below, and again, 40% chance it's double top, measure move down. Decent entry bar for the Bears, but I think the Bears will get disappointed, and this may just be a retest of the breakout below the low of the prior day. Okay, 3 consecutive bear bars may go a little bit lower, but they didn't. So, strong enough bear breakout, sell the close. Bears will sell higher. We tested the double bottom. Strong enough breakout, any pullback. Bulls will probably retest the high, and we will. The Bulls get a second leg up. We broke below the low of the prior day right here, so we broke below it. And again, we failed. We tried to break below again. Looks like we're failing. You could probably buy above that. It's a failed breakout of the prior day. Buy, stop below here, but a lot of risk, so I'd be quick to get out. Decent follow through, closed at the high, but okay follow through, probably going a little bit higher. Doji, so not great. Realistically, we're going to touch the moving average 20 bars. You could probably get out, save yourself some points, and that's exactly why. I wouldn't buy, if anything, I would be long, stop below, and you got stopped out. So again, trading range, that's exactly why I said I would not, it's not that great to be long up there, and I'd get out to save some points. So I would do nothing. And if you wait for stop entries, it's reasonable to do that. To just wait for stop entries. 3 consecutive bear bars probably going lower, but maybe not. Strong enough for a second leg. We have our second leg down, but no decent bull bar. Okay, so now we have a big bear, bear doji, but starting from a tight channel, tight trading range, I still wouldn't buy. So what do you notice over here? Well, it looks like a trading range. Stop entries, we're getting stop entries above bear bars. Here and here, we're getting successful stop entries below bull bars. Here. So it's just not that great trading, but looks like a trading range. The bulls cannot get above the moving average, which makes me concerned that we'll go a little lower. And that's why. So when the bulls keep failing to get above the moving average, very often we break below. Strong exhaustion, probably will test up here before we go a lot lower. May get a second leg, so got to be careful because you may get that. And here, so bulls buy, probably stop below. I think we'll get above this high. We are, and we did. We got above both highs. So trend line break, but still probably minor. The bulls need more. So you may get a deep pullback soon. High one buy, probably sellers above, low too short, but bull bar. Okay, we're getting more up, possible final flag area. This still could be minor and a 50% pullback of this. But always in long, no reason to be short. Strong enough breakout, probably minor, get a second leg up. And what's happening? Well, it's just melting away. When you're in a trading range, I just want to go over here real quick. Well, it's the end of the day, but either way, when you're in a trading range and you get this, it's 50% pullback, it's strong. The odds are you'll get a second leg, but what you don't know is if you'll get, that. You break below, go a little lower, test up. That is why it's better if you're long to get out 3 consecutive bear bars. Sell out of longs and bet and wait. No reason to sell, no reason to buy, probably sellers above, going lower. You could buy, but micro channel, probably sellers above. End of day. Here. Okay. This will be the last day I'm going to do, and then I've got to go. But gap down, doji bar, probably going to go above the bar. Not yet clear, but probably tight channel down, so not really clear. Okay, clearly always in long, so buy, stop below here, but might be minor, so we may just get to the moving average and go sideways to down. Another bar, but getting smaller, and there you go. So this paints a good point. As I said, might go sideways to down. The problem is, the reality is, we broke below the low of the day. We'll probably have to try to break below it again here. We've already tried once, we tried twice, and may try a third time. And realistically, 20% chance, maybe 30, it's definitely not above 50, that this is the low of the day. So it's not a great trade. And that's and this might be why. So trying to form a double bottom, but tight channel down. Probably minor reversal, and at least you probably need a micro double bottom. So if I was short, I'd get out of the longs. I'd buy back shorts above this bar. I wouldn't go long, and that's why. Okay, so what happened right here? Big outside down bar, surprise bar. Probably sellers halfway up. Bulls bought this low, decided it was a bad trade, bailed out. Big bar down. As I said, odds are this wasn't the low of the day, but what will the follow through be? Doji, so probably buyers not far below, 2 legs down. After every decent bar, you're getting bad follow through, decent bar, bad follow through, decent bar, bad follow through, big bar, bad follow through. So, is it sell the close? I don't know. I don't think it's a great place to buy. So bulls trying to close the gap, bears trying to keep the gap open, close the gap, tight channel. So probably need a minor reversal and need a retest down. 3 consecutive bear bars. Well, probably always in long. If I had to do anything, I would buy, but if you're at the moving average, I think it's worth waiting to buy a pullback or waiting to buy a little higher. Whoops. Okay. Probably buyers below for at least a little more up, so I wouldn't go short. Outside up, surprise, probably at least a small second leg up. And, we're going down, and there's the second leg. So 3 pushes up, kind of parabolic, 1, 2, 3. No reason for the bears to get out of shorts yet. Or no reason for the longs to sell out of their longs yet. Above the high of the day, probably not going much higher. 50% pullback from this high to this low. So probably we'll get a deep pullback and then test up here. So I'd get out of shorts, but you don't have to. Okay, still going higher. Fairly tight channel. Forming gaps. So, but I still think we're going to have a pullback. But it is always in long and only buy. Okay, outside down bar, surprise. Strong enough bar to make the market go sideways and maybe have a small pullback. I don't know if it's strong enough for a reversal, but I would get out of longs below. Okay, and ideally, probably buy above. If you do, stop somewhere down here or here. I wouldn't put the stop below, too much risk, maybe 50-50 chance. You get a small second leg down. Looks like we may not get the second leg down. It looks like it may go straight up, but maybe not. If I did buy above, I'd probably just get a shorts below that bar. Strong reversal, trading range, probably going sideways for a little more. Possibly a strong enough bear bar for a second leg. So again, if I bought, I wouldn't put my stop down here. It's minor, so probably better down here. That's because, again, for surprise, too much risk will fall below here. Could be another surprise bar and maybe a little bit more down. A small follow through bar, so probably at least a small second leg. Another bear bar, probably going a little bit lower. Bigger bear bar, probably going a little bit lower. But 50% pullback, so dangerous to be selling down here. May try to get to the open of the day, which is right here, so not much below this line. Okay, bull bar, would I buy? No. Tight channel, odds are we'll get a lower high in the second leg down. Enough to make the market a trading range. I wouldn't buy though. Surprise bar, big bar, testing up here. So odds are we'll go a little bit higher. You probably can buy, but you have to be careful. If you do buy and you get a bear bar, you get out. If you're long, stop below here. Surprise, odds are you'll get a second leg up. Even bigger bull bar, so clearly some sort of report, something's going on. It doesn't matter. Strong rally, you probably have trap traders that sold this high and sold anywhere in here. Probably strong enough that this will dominate the rest of the day and will at least get a second leg up, so no reason to sell. Small bar. Okay, broke above the high of the day. We turned down and found sellers. You could probably, I would get out. I'd get out of longs below. I would just get out. It's a possible second leg trap. Now, the problem with this is I'll kind of point out, well, this is 11:50. Okay, I'll do it real quick. It's fun to talk about anyway. So this is kind of like what we had the other day on Friday. Strong sell-off, and as you can see with that bull example, for the bulls, we had a bear bar closing on its low after the second leg up. Here we have a doji bull bar, so it's a bad buy above. When you get a strong sell-off, that's possibly a second leg trap, but you get a bad stop entry on the first bar right here. The odds are, even if we go above it, while it makes sense to get out of shorts in this case, or longs, vice versa, while it makes sense to not be short, and you could get out above here, it's not a great buy because the odds are going to go sideways. So kind of, take a mental picture of this right here. Let's go back to the 15th. I could do this a better way, but I don't feel like it. Okay. So, even though we already saw what happened, when you get something that's this strong, and kind of like this, 2 big bull bars. If this next bar was a strong bear bar closing on its low, maybe it's a second leg trap, but the problem is, it would have to be at least this big. And it would have to be, this bar and this follow-through bar would have to be that. But the problem is with that is these bars are so big, it's probably going to have to go sideways before anything. So traders are buying because they know the market probably has to go sideways, and there's not a lot of risk to the downside for these bulls. And by the way, I want to point something out, and I have to zoom out to see it. The reality is traders will do one of two things. Traders will sell, trying to think of a reasonable place, maybe below there. We'll just say below that bar. It's not great, but whatever. Traders will sell this high, sell more below here, and use a wide stop. I don't think any of this is a great place to sell, but if they did, and they may try to get out break even. Obviously that works. Or they'll sell here and they'll scale in, all the way up and get out break even. It's a lot of risk, and the reality is, I'd rather someone go long, just take the loss, go long, ride it up, probably sell it. You can get out, but if you do, you got to get long in above that bar. But you probably need a wide stop, or you could wait for that bar and you're going to go higher. You're going to get a few legs up and get out up here, and you'll more than make back your loss. So let's look at a few things. One, kind of a surprise, so you may get a small second leg. Tail on top, you may find disappointed bulls buying the close outside down, but this is a fairly tight channel. Odds are you'll get a second legs, and more likely a trading range, probably buyers below. Going a little bit higher, no reason to get out of shorts or get out of longs. Strong breakout, surprise, probably at least second leg up, but could be the exhaustion, and it's a third push up, so you got to be careful. That could be the second leg. You got to be kind of concerned about that. We may get into this pullback. We tried to break above this high over here. We tried again, over here. So it's arguably a second failed breakout of the high of the prior day, or at least this range. So big bear bar, surprise. I definitely, what would I do? I would definitely get out of shorts. I don't know if I'd buy. I guess I might buy. I probably would, but I'd use a wide stop. Okay. Strong entry bar, tighten stop below, probably going to test a new high. This is a surprise and will have an impact on the rest of the day. We may get a measuring gap in maybe the next session, kind of like that. And right here. So 2 things. When you get this, it makes the most sense you could just take a small loss. You're probably better off because too much risk will fall below this low. And this could be a strong enough bear breakout for a second leg down. So if you get out, take a small loss, you can probably buy lower, and which will benefit you down the road. And we may not get that, so it looks like we're just going sideways. So you can see the market kind of trap traders out right there. If I did get out below here, what would I do? I'd probably just buy again right there, but late in the day. Okay, that's all the time I have. Thanks for watching.